90% of traders think that they have a trading plan, but the reality is that 90% of traders lose money on the markets. Are you on that percentage that still is not consistent and therefore cannot pull profits of the market? If so, this video is going to be for you. So in today's video, I'm going to be breaking down a swing trading strategy. Okay, I'm gonna give you 4 very simple and actionable steps for you to actually get into a next level when it comes into your trading and your profitability. So it's going to be 4 steps. I'm going to be giving you step by step what you should be looking at. On the graph, you can see right now the daily time frame. So that's going to be the confirmation number 1. So confirmation number 1 is going to be look at the daily time frame. The daily time frame, we're going to use it for market direction. Okay, it's not going to be for anything else than just knowing where are we sitting on the market and where we can actually be heading towards. So in this case, we can see how we call this one on one of our Q&A calls that we were having on a weekly basis, where we expected this run of liquidity of that low, and because we're still sitting on a demand area and liquidity was forming 1-2 taps, and therefore after this run of liquidity we can expect a move up. That will be a third touch of a trend line, so the direction of the market was heading towards that. And then of course we tapped beautifully today on our 1 to 30 was the last TP into the new higher highs. So therefore daily is for direction, okay, knowing where you're sitting on the market, knowing where you can head, and giving you that extra or longer move for you to swing. Then the second confirmation that you're going to be looking at is H4 and H1. So H4 and H1, they go hand to hand. So in this case, we're going to look at on H1 because you can see it's a bit more clear. And we're going to be looking at market structure, okay? So the key or second confirmation in here is to understand what sort of trend you're having on the market. In here, what we can see is you have a point in price that made an internal BOS. An internal BOS is when you have a change of character in the market from, in this case, bearish to bullish. And now you see how it actually makes a retracement, slow to the downside, taps some demand area, then goes into create a new higher high, then actually creates a retracement into a decisional area, then a new push into the upside, which actually is now retracing into another decisional demand area. Okay, so there's a clear bullish order flow of the market, in this case on H1 and H4, aligning with daily. Okay, you can see that the daily wanted price after that run of liquidity that could potentially go towards our next target objective, which was taking out the liquidity plus higher highs. The confirmation number 2 is that we actually have bullish order flow in place, and therefore this can actually keep going to the upside. So now stick with me until the end, because this is just how you start framing by the 2 first confirmations. We still have 2 left that we're going to be covering now in detail. So now, very important, our next or third confirmation is going to be how to read M15. So what are we going to be looking at in this time frame, or this third confirmation, is going to be understanding change of characters or understanding change of momentums, right? Because we already are bullish on a daily direction, we are bullish on a H4 and H1 time frame, and now once we jump into certain pullbacks or demand areas that are decisionals, any change of character, like we can see here, of market structure after running a low and therefore pushing to the upside, it's indicating that you have daily, H4 and M15, all 3 time frames aligned bullish, and therefore you can actually go and look for buying positions. Okay, so something very important, or that I see when it comes into the difference between swing trading and intraday trading, is that there's so many intraday traders trying to catch very long moves, and that's not the purpose of intraday trading. The purpose of intraday trading is like you're trading based on M15 to M5 time frame, therefore your exit should be between those lines. So you can see on the graphing here, there's a London setup that we could potentially also sell, but this London setup should finish in here. So if you want me also to cover an intraday strategy, let me know in the comments. I will also do a separate video, and in here we can continue with the swing position. Okay, so as I said, confirmation number 3, change of character, from bearish to bullish after a new lower was generated, and on a POI that was a decisional level based on our main push. Main push is the way we qualify market structure on a higher time frame. So this is H1 to H4 more or less, and that's our last higher low that created last higher high. So anything in here becomes a retracement or pullback, and therefore in here we can see a change of character. Now, so simple, right? It's actually very easy, actionable steps for you to take forward and actually jump into it. Now, the fourth and last one is going to be two things. One is going to be execution, and the other one is going to be timing, and they go hand to hand, okay, in the fourth confirmation. So execution and timing go hand to hand, and the reason is because we're going to be doing this on a M5 time frame. So M5 time frame is going to be our execution one. You can go M1 if you're a bit more advanced, but for this video we're gonna leave it into M5. And on M5 we're gonna be looking after the change of character to see that retracement coming in place and that mitigation of the block that has run previous liquidity. And we want this process to happen on this window, right? We can see a gray area in here. That's our W indicator, but again, just so you know, we need to see this on a London session or on a New York trap session, okay? This happens between 9 to 10:30. This is Madrid time, so if you're in another time zone, just change it to yours. And in here, it happens between 3 p.m. to 4:30, okay? That's going to be our windows where we want this execution point to happen after all the other things are also aligned, okay? So confirmation number 1 needs to be there, 2 needs to be there, 3 needs to be there, and 4th with execution and timing also needs to be there. And in here, then you can, if you're a bit more advanced, this is just basic, you can add extra things to it, like, oh, okay, we have equal highs in here, therefore you have liquidity, or you have, you know, a break and a test that can also induce here. So all these little things, you can add them into your trading plan, which there's some videos on my channel regarding all of that. But in here, for confirmations, pretty simple, and from here you execute, okay? So your execution will be from here, this block in here where the imbalance closes, and you have around, which for a USD CAD pair is pretty solid, you have around, let me check the stop loss, around 6 pips stop loss, which is solid. And then what's going to be our targets? So first of all, because that's going to be the last target, the one that I had in there for 1 to 30, but first of all, you need to target logical and next areas. What are logical and next areas? Well, this made a massive push to the downside running this liquidity, even though we are targeting all of that as liquidity on a higher time frame, because this could be, again, 1, 2, and 3 touch of a trend line, and the daily was bullish. You still need to pay yourselves at some point. So this is going to be our first point to be paid, because also from a structure perspective, this is the last higher low that created a higher high, then you have a retracement, and then that becomes your new push to the upside. Therefore, it makes sense to pay yourself, because again, in this case, we had a very shy retracement. By shy, I mean you just got into here and then price rally to the upside, but you could have had an actual retracement lower, and therefore there's a bit of risk of maybe getting stopped out break even. Therefore, it's very important to pay yourself on logical supply areas, but at the same time, after a rally like this one, of course, you need to pay yourself. This is a 2 take profit protocol on a swing perspective. If you want to pay yourself 3 times, it's also perfectly fine. You'll do 33% of the volume on a maybe lower position like 1 to 6 or 1 to 3, and then pay yourself on a 1 to 10, and then leave a runner of another 33% of the volume to the upside. In this case, we do 50% on a 1 to 10 because this is a swing position, and the other 50% of the volume you do on new higher highs, which is a 1 to 30, okay? These trades don't happen every single day, but when they do and they align, they're super powerful. They're very high probable, and at the same time they pay very, very good, because the ROI you can see there, right? You're doing up to a 1 to 30 risk to reward, which is crazy. Just before we close the video, I'm going to be doing just a quick tip also for the people that can monitor the session and at the same time wants to actually leave limits, right? I hear this all the time where they tell me, well, but I still have a job, or I'm in that position where still I cannot monitor London or New York session because I have kids, or whatever situation is. So what I'm gonna be doing is changing step number 4 a bit for you guys. So if that's you, you can stick for the end of the video. And what you're going to be changing on this is now you're gonna be, instead of on the fourth one, which is execution, right? Instead of looking for any sort of lower time frame confirmation, you're gonna execute based on, has to be there on timing, of course, but even though you can monitor the timing, you will leave it on an M15 candle. Okay, so it's gonna be exactly the same, but you're gonna do it more from an M15 perspective. Now, there's gonna be times where M15 candle and M5 candle align completely, like this case. You see that M5 and M15 are both on the mark of around 5 pips, 6 pips. Okay, so both were actually sharing the same entry and stop loss, but there's going to be times that you will see that they do not align and the M15 is a bit bigger. Even though it's a bit bigger at some points, I think it's fine because it's going to allow you to get at least trades of a 1 to 3, 1 to 6, and therefore keep growing your portfolio or getting those new or funded accounts for you to keep scaling and then actually go into a better position. So the only thing will change if you are on that position is execution, which is the confirmation number 4, which you will not need to enter on M5 because you need to monitor the session, and therefore you'll do on an M15 perspective. Okay, so that's going to be the end of the video. Hope this made sense. We're gonna summarize very quickly. Confirmation number 1 is going to be directional bias on a daily perspective. Where are we sitting and where we can potentially go based on market structure, if you're bullish or bearish. Confirmation number 2 is to check the order flow. What sort of structure do we have? H4 and H1, is it creating higher lows and higher highs, or are we creating lower highs and lower lows? And you want that to be, of course, aligned with your daily time frame if you want to do a swing position. Confirmation number 3 is going to be the M15 time frame. Remember, we can see now on the screen the M15. You want a change of character. You want a change of character from a decisional or POI point or extreme point that actually is aligning yourself with confirmation 1 and 2. And confirmation number 4 is going to be the execution, and you want it to be on M5 to reduce your stop loss and on the timing that I gave of London or New York trap. If you are working, execution will change into M15 perspective, but this is going to be a 4-step actionable, very simple strategy for you to level up on your swing strategy trading. So hope you enjoyed the video. Let me know in the chat, if you, in the comments, sorry, if you actually want to get also an intraday strategy, and I will share with you guys in the future. So hope you enjoyed the video and see you in the next one.